BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap gets you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.io. Welcome to BitBoy Crypto, the largest crypto channel in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in cryptocurrency. If you love money and crypto, make sure to hit that subscribe button. Today, guys, we're not doing our normal live stream this morning. Instead, I had a special guest come on the channel, Carl from the Moon. We're going to be talking about where Bitcoin is going in the short term. And also, guys, if you do want to use Market Cypher or trade with Bybit, take advantage of any of the information that you find in today's video about Bitcoin, maybe where to catch a bottom and ride it up to the top. We're going to be talking about some 300% gains over this bull run, could be in the next 100 days. If you want to take advantage of that, make sure to head on over to bitboycrypto.com/deals or bitboycrypto.com/Bybit in order to sign up. We got a trading competition going on right now you can get access to on that page and win up to $6,000. But for today, we're going to be talking with Carl. So let's go ahead and jump straight into this interview. Hey guys, today I'm joined by Carl from the Moon channel. We're going to be talking Bitcoins. You guys know we're not doing our regular live stream. We'll be back live streaming later tonight. But Carl, very glad to have you on the show today to kind of talk about what's going on with Bitcoin. We had a big dip overnight. Just want to get your thoughts on where we're heading kind of in the short term this month and maybe beyond that.
Yeah, sure. Let's get right into the charts. All right, so this is the Bitcoin chart on the daily time frame, and the indicator that I have on the chart is called the EMA ribbon, and basically this is a ribbon of several EMAs, and as you can see up here, it's the EMA 55 to the EMA 20. So the lowest one is the 55, and the highest one is the 20 EMA exponential moving averages. And essentially, when you are in an uptrend, usually this ribbon acts as support. And we can clearly see that in the previous correction we saw back here in January was, it was a 30% correction approximately. It came down and exactly perfectly bounced off of the 55 EMA, which is the bottom of this ribbon. And then we saw a pump to the upside. And right now, we can see that we didn't actually reach the bottom, but we did see correction, and we came in here into the ribbon, and so far we've seen a small little pump after this small bounce. And the first thing I want to say is that as long as we're above the 55 EMA, so as long as we're above the ribbon, we're remaining technically bullish on the daily time frame. So we can go all the way down to 42,360 approximately and still be bullish, even though that would be a correction of approximately 25-26%. And 25-26%, it's actually not a big correction in Bitcoin. We all know that Bitcoin does much bigger corrections even in the bull market, like the previous bull market where we saw 40% corrections over and over. So essentially we can say that, people always get a little bit bearish when prices dump like this. I remember when we saw the initial spike down here, like 16%, people got super fearful and panicky, but it's Bitcoin. This is everyday life in Bitcoin. And if you, I usually tell people, if you cannot handle a 20% dump in Bitcoin, then you don't deserve the coming 200% pump, which is coming it's always around the corner in Bitcoin, right? But basically, I also want to show you something else here. So let me pull out some lines. That
I think before you get to the lines, like I think you make a really good point there. It gives me some ideas, I think, maybe for some videos, which is, when you look at these corrections, if you look over the last bull market, there were like 3 or 4 40% corrections. They were right at like between 38 and 40%. In this one, it seems like all our major corrections we're getting are like 25%. And I wonder if that's kind of evidence that maybe we're not going to have as harsh of a bear winter. Like maybe the volatility is just getting a little bit less to the downside. Yeah, you have any thoughts on that before we get back to the chart?
Actually, I do have some thoughts about that, and I am going to. I already prepared some TA for that. So if you give me just 2-3 minutes, I'm going to go into this chart, and then I'm going to go right into that.
I see the future. I see the future.
Yeah, you do.
What can I say?
You do. So guys, stick around for that because this will be interesting. But let me first off show you this horizontal line because I think this is in the immediate short term very important to keep an eye on. It is this level at 40,000 let's say 41,000 approximately. It is the previous top that we topped out here back in January, the beginning of January, and we didn't test it yet. And we can also see that the ribbon is lining up quite nicely around this level. So for everyone who's looking for the bearish scenario, this is the level to watch, 41,000. If we break this level, then in my opinion, I'm going to flip bearish on Bitcoin on the daily time frame, and I will be expecting lower price levels. In that case, I think we can go, we could go as low as something like 30,000. I could bring, just real quick, I could bring up the Fibonacci retracement tool to just show you kind of the worst case scenario, or a bad case scenario. And don't worry about all of these small green dots here. It's just my trading view that is lagging a little bit. So the Fibonacci retracement tool shows us that if we initiate the bearish scenario here, we break the $41,000 level, then in my opinion, the level to watch could be all the way down at 24,000. That would be the Fibonacci golden pocket. But this is if you're really bearish. And like I said, we didn't see this scenario play out just yet. Just to kind of go into the bullish scenario before I go into the next chart. If we get this bounce here, like we saw last time, look at this. We saw a bounce here, and then we saw a massive pump. Let's just assume that we see something even like remotely similar. Let me see, from this bottom there to this top, we saw a 100% pump. That happened in literally 31 days. So let's just assume that we see the same. Let's say the same from this bottom, and we pull this up 100% up. Let's see, we have to do a little bit of this. 100% up. This could put Bitcoin at $85,000 to $86,000, and like I said, that was it 31 days. So let's say we do this exact measurement again, 100% in 31 days. What I'm saying here is that this is not an exact prediction, but this is an estimation of what's actually possible. We could see Bitcoin at 87,000 by the end of March.
Wow.
So yeah, and
pretty amazing.
Pretty amazing, yes. And it seems crazy, but then again, when we were down here at 20,000, I mean, if you told someone that Bitcoin was going to go up to 41,000 in 31 days, then they would have said you're crazy, and that you're.
We wouldn't have even believed that.
Exactly. I never personally thought. I would have also said you're crazy. Like, yeah. So yeah, call me crazy, guys, but I'm just saying that this is possible, and as long as we ride this exponential ribbon, I will remain bullish and remain. I mean, the trend is your friend, right?
Yep.
But pay attention to 41,000 yet again. That is the level where this bullish scenario actually turns into a bearish scenario, and then the target is off. We're not going to see that anymore. But this is the short-term analysis I have.
Yeah, I think that 85,000, we were kind of looking on my stream yesterday, kind of looking at some numbers and looking at some charts. 85,000 seems to be the number that's about what I came up with as well, actually, which is kind of cool to hear, you also give about that target, because you know how it is in crypto, everything's memes, and we've got all these memes of Bitcoin to 100K or Bitcoin to this number or that number. And, I haven't really heard anybody talking about 85,000, but yet now 2 days in a row, but my analysis and your analysis completely randomly, while we're looking at the same chart, has led us to the same number. And I think there could be something to that for everybody to pay attention to.
Yep, that is funny. That's a funny coincidence. And it is possible. It is definitely possible. Yep. And but you were talking about these these corrections, the 40% corrections, and yes. Now that we have 25% corrections. So I want to go into this chart here. And what we are seeing in this chart is the current cycle and the previous 20K cycle.
So similar.
Very, very similar, isn't it?
Yeah.
Look at this. This could be something that definitely is significant. And yeah, so basically what you were talking about was that these corrections down here were approximately 40%. This one was 40% back in July, I think it was, 2017. And we have another one here that was also like 40% back in September 17. And we all know what happened after that, right?
Yep.
This huge spike up to 20,000. And well, like you're used to looking at the chart like this because we're all always like very zoomed in. But if you just zoom out a little bit and do it like this, then you can see that this is how the chart looks right now. And this correction was 35, 36 approximately, which is actually quite similar, to be honest. And this one was only 24, 25 so far. But yeah, you could make the case that these corrections are not as deep as these ones, and maybe that's a sign that this time is different and that maybe we're just going to come back down again. But I mean, looking at this, I don't know what you think, but I think it looks quite interesting, quite similar. So playing with the numbers, you can just see that, like, let's say from this top up to 20K, this was 304% in 100 days.
Yeah.
And so if we do 300% from this top in 100 days, just to kind of yet again play with the numbers here.
I love it when you got it, when you got a minimum, when you got to shrink the chart to show the numbers. That's a good thing.
Exactly, exactly. So yet again, this is not an exact science or anything. So let's say 300% here in 100 days. That gives us approximately $230,000 within the next 100 days. Is within the realms of possibility. But like, this is not it's not a prediction per se, because obviously I'm just kind of playing with the numbers. But I really think we should pay attention to this, because previous price action often rhymes, as they say, right?
Absolutely. Yeah, I think that's unbelievable. When you look at those charts, I haven't actually done the side-by-side comparison of where we are now to where we are, where we were in 2017. And I don't know, it's a little interesting because, I mean, I certainly, if we are at $300,000, or let's just say that number, $230,000 in 90, and you said 100 days it was, that would put us in the middle of like almost July, right? That would put us almost July, which would be a couple months earlier than, the cycle would seem to project. So we could, see either maybe one extra leg to this cycle, or we could also see a longer correction in the middle at some point, maybe some sideways action. But it's very interesting to look at all these numbers. I do think that sometime over the summer is when we will hit six figures. We could hit it maybe a little before that, but I think probably we're going to go up to 85, come back down somewhere around, 50, 55. Then we're going to head back up over 100, come back down, and then that's when we'll finally get our push up. Usually we see about 5 phases to these bull runs.
Yeah. So exactly, it's possible that we are not going to see the 2017 scenario play out, but rather the 2014 scenario, 13 scenario, 13 exactly, when we saw these double top kind of thing. So yeah, because you made a good point there. We're going up faster than the 2017 cycle, and we're basically getting ahead of ourselves right now, it seems. And that could be a bad sign for the short term, where we might be overextended. And I think it's very possible that we do get a big correction before we reach 100,000. What do you think? Do you think we're going to see like a 50-60% correction before 100K?
I don't. I think the 2013 bull run was an outlier. I mean, we only have a few to go off of, I mean, there's not that many cycles, but I think it was just a different time. I think now, with all the attention that Bitcoin has, I would think it'd be more realistic if we have 6 positive legs to the bull run instead of 5, rather than seeing long sideways action in the middle. And it is possible that we could see sideways action for a long period of time, maybe when we get to $100,000. I think that's more likely. I don't see a scenario where we have kind of 2 separate bull runs, because if everybody goes bearish on Bitcoin, it's so mainstream at this point that I think it will be hard in just a few months to get it going back the other way. So that's kind of my, the way I look at it. But I do agree with you that looking at it, we are a little ahead of where we should be. And that, is concerning on one hand. But I just, we talk a lot about the technicals when we bring you on, and the technicals are very important. We love to look at the charts and give everybody advantages, whether they're trading on Bybit or whatever the case may be. But at the end of the day, the fundamentals are what I think is driving, going to drive the price through the roof right now. Michael Saylor, the whole situation with MicroStrategy, Tesla, who knows, Apple, Netflix, who's next? All these companies are next. Once these companies start buying in, and they're buying so much Bitcoin, I think it's putting a stranglehold on the circulating supply. And I think that may be why we're starting to see not as much movement to the downside as in previous cycles. But hey, you looked at it, the first correction we had was 35%, which is aligned with that 40% number. So maybe this one isn't done yet. That might also be the case. But I would think that we're going to see less volatility to the downside from here on out.
Yeah, people seem to say this a lot, like institutions are here, so this time is different. And yeah, I mean, this time is definitely different in the way that we have the big money coming in, and we didn't see that before. So we have to entertain the thought that maybe Bitcoin is not going to see these bigger corrections in the future, and that the volatility is going to go down. I mean, the volatility will go down inevitably because the more money that flows in, the liquidity goes up. Exactly. It's like a small rock is easy to move. A big rock is harder to move because of laws of physics. It's the same with liquidity. So that's why it's very good to see more and more money flow in and institutions come in, because as soon as Bitcoin is at the gold's market cap, then we will have the volatility of gold approximately. And if it's 10 times bigger than gold, then we will have maybe 10 times less volatility than gold. It's not an exact science, but it would be quite reasonable to expect something like this. And I think that's very good for Bitcoin, because if Bitcoin is going to work as a store of value and a transfer of value online, and also as a medium of exchange in the future, then we need the volatility to go down significantly. So yeah, I think the future is very bullish for Bitcoin, that's for sure.
Yeah, absolutely. No question about that. You know, I really agree with everything you said there. And I think I fall in the middle. You know, you have the one camp that's like, oh, it's just going to go up forever. And we know the camp. That's the dumb money. That's people that you don't understand. They haven't been through the cycles. And that's not I'm not putting anyone down that's newer to crypto. I just mean that's what, the term, the newer money that comes in, it's not as experienced and it doesn't make the proper moves. And they're the people that get euphoric and think it's going to go up forever. I certainly think we are going to go through another bear market. I don't think there's a question about that. But I also do think it might be less of a bear market than we've seen in the past. But Carl, thank you so much for coming on. Your analysis today, absolutely spot on. I hope everybody can take something away from this positive to help with your trading life or your investing life. So Carl, thank you as always for coming on the show.
Thank you so much. It's also so awesome to have you on my show. I think that these collaborations are amazing, because I think that people just enjoy seeing us talking about things together, because it's like, I remember also before I went into crypto, when I saw two of my favorite YouTubers doing collabs, it's interesting and it's fun to see this discussion, because it gives this conversation, and it's very, very cool to watch, I think. So smash the like, guys, smash the likes like never before.
Yeah, especially like, of course, you guys make sure to go follow Carl, go subscribe to his channel. You guys get that link down below. Also, don't forget to follow Carl and myself on Twitter. You can find me, BitBoy_crypto. And then what's your Twitter handle, Carl?
The Moon Carl.
The Moon Carl. Carl, listen, I love you, man. I'm coming after you on Twitter, though. I'm right behind you. I'm breathing down your neck. Carl's got a lot of followers there, and he's definitely puts out a lot of great content, a lot of bullish tweets. So you guys make sure to go follow him there too. All right, guys. Well, thank you guys so much for watching. Drop some comments down below. Let us know what you want us to talk about next week. And that's all I got. Be blessed. Good boy out.